Hi, so in the previous videos we've been assuming that our taxes are just lump sum, and so the government just takes some amount off everyone or a certain subset based on some unobservable characteristic, but the taxes in the past haven't distorted any behaviour from anyone. However, this now changes when we look at labour income taxes, because this is going to somewhat distort our labour market. We are changing the relative value of labour and our relative wages. So how does this factor in, having some income tax on our labour? Well, let's first consider a static model where, for simplicity, let's just say there's one period, and so a consumer is just going to consume C whatever they earn in income. So their consumption is equal to their income. And we are going to say that our income is some wage rate multiplied by the income tax rate we have on this. And our income tax rate is going to be tau. And this is multiplied by L, the number of hours we work. So this should be fairly straightforward, that we are earning our wage rate multiplied by how many hours we work, but some part of this is going to be taken away as tax, and our income tax rate is tau, which we're going to say is between 0 and 1. We could say it's weekly in these boundaries. So if we have a tax rate of 0, then we just go back to our original model where we just have our income as wage times labour. And okay, as an addition to this, we're going to also add this B term, which is some additional rebate on our income, because as we can see in this model, we have some sort of tax being taken off people. Well, what is the government going to do with this tax revenue? They're going to do something, and what we're going to assume in this video, where we're going to look at isolating the effects of this distortion this labour income tax causes on our labour choices, we are going to assume that all this tax revenue that's taken from the consumer is just rebated right back to the consumer. So we're going to tax something from the consumer, and then we're just going to give it back to them. And you may think that this would have no impact on anything, but you would be wrong. So the amount of tax revenue we gain from this tau term, if we expand out this bracket, the tax revenue is going to be equal to this, the wage multiplied by the tax rate multiplied by the labour rate. So if we're rebating this, then this B term is going to be equal to exactly that. So we now have that our consumption is equal to this expression. And if we were to expand it all out, we would get that this is just our consumption is equal to the wage rate multiplied by L, but the consumer does not view it in this way. The consumer is not internalizing this B term, because we are in an aggregate, a macro economy. So the consumer assumes that they have no power over this B term. This rebate is just going to be distributed equally amongst everyone, and each individual consumer has no actual power over individual things. It just so happens that this B is going to be equal to this term, but the consumer treats it as if the original equation I wrote down is their consumption. They are just going to assume that this B is some constant that is given. They don't change this constant by the amount of hours they work. They are given this amount of income to spend, but this income that is given by term B is completely exogenous. They can't control that part of the term. So, given those assumptions, let's draw a diagram and see what happens. So let's draw some axes. And our axes here are going to be, we have consumption and we have labour. We've drawn this before. And so we have our budget constraint, which is sloping upwards because we gain utility from consumption and we lose utility from labour. And so, well, that's not why our budget constraint is sloping upwards, But the fact is that if we increase our labour that we supply, we gain more income, and so we can purchase more consumption with this additional labour. That's why it's upward sloping. I was getting a bit confused there myself, but so that's why it's upward sloping. And our indifference curves slope in this direction because we gain utility from consumption and we lose utility from labour indirectly, because increasing our labour will decrease the amount of leisure we have available. So we start off at C star, we're optimizing, so we are at this tangency point. My indifference curve is not drawn very well. It shouldn't be just looking like part of a circle. It should be always upward sloping, but there we go. And okay, we are initially at this point. Now, what happens when we increase our tax rate tau? So let's imagine that we increase our income tax. Then what we are effectively doing is we are decreasing the term 1 minus tau. And so this term is multiplying the slope of our labour curve. So we are making this curve flatter or less steep. So we move now to this curve here. This is our new budget constraint because we have a higher level of tax on our income. So for every unit of income or every unit of labour we supply more, we gain less consumption because more of our labour income is being taxed away, hence why the slope of this curve changes. But we are not done yet here, because now that we have increased this level of income tax tau, we will also increase the amount that is rebated back to the consumer, because that is what we're spending this increased tax revenue on. We're just handing it back to the consumers. But this is not internalized by the consumers, so the slope of this curve still stays equally flat. But let's get this in green. By adding b to the equation, we are going to shift our income curve upwards by the amount of this rebate. So we are shifting upwards by b, and so this b can just be interpreted as it's just a lump sum. We're just giving some amount of income, and we know that that enters into a budget constraint. It's just a parallel shift in the budget constraint, so it will enter into our diagram like so. So now this green line, this green budget constraint, is where we are now. And so after all is said and done, we maximize with respect to this new budget constraint, and if I'd have drawn my indifference curves properly, this would have been a bit easier. But let's just say that this is our new tangency point when we maximize with respect to this budget constraint, and our new optimum is L1 star and C1 star. That's where we are, and as we can see, let's get a pen, a green pen, we have decreased our amount of labour and we have decreased our amount of consumption by implementing this policy. So this is the impact, and this makes sense because we have increased our tax on labour. Effectively, we've got income tax, so every unit of labour is being taxed more heavily. So if we tax labour more heavily, we expect people to want to work less because they get less income back from working. And if people work less, well, they're going to get less income, so they are going to consume less as well. So that is the impact of having a labour income tax, and we've rebated it back, as I said before, because we want to isolate the effect of the distortion that this has caused on the market. So each of these consumers, they actually have the same amount of income overall, So they would be able to, as we said, if we expanded out this term here, it's as if they don't have a tax, because we have C equals W. What am I doing here? Equal to WL minus W tau L. That's the expanded bracket, but we have plus W tau L. So if we get rid of these two, it's as if they don't have a tax at all, because it's all being rebated back to them. But as we've said, that the rebate is completely exogenous to them, they don't act as if this is internalized, then they will change their labour and consumption choices, despite the fact that they have income, as if there wasn't a labour income tax imposed on them. So we do have this effect of reduced labour and reduced consumption as a result. So that'll just about do it for this video. Make sure to check out the playlist for the next video, which we'll be looking at a capital gains tax. Do please like this video if it was at all useful, and of course subscribe for plenty of future videos.